What is up, everybody? Happy Sunday. Today is Sunday, September 10th. And we have a lot of different catalysts this week for a potential move in the market. First of all, let's talk about earnings. Starting tomorrow, we have Fuel Cell reporting tomorrow morning. We have Oracle and not many other big names. Oracle is probably the biggest name on Monday afternoon. Tuesday afternoon, there's a few names here, but nothing really well known, to me at least. Just looking through, not much on Wednesday as well. Thursday we have Lennar, we have Adobe, and we have Lightpath after the close on Thursday. So a lot of the smaller names reporting. Nothing too major there. Looking at the economic calendar real quick for the week, we do have. Let's see. CPI numbers come out on the 13th, which is Wednesday. PPI comes out on Thursday, and then we have consumer sentiment coming out on Friday. So some big potential catalyst for the market there. And then we also have the Apple event on Tuesday, which I find that doesn't really yield much result. It's good for day trading, but doesn't really give much in terms of market direction, overall. So let's get right into it. So first one on your list on my screen here is SPX. SPX on the daily, we had. So let's just recap really quick last week. So we found the top, rejected at this previous high here. There might be a little bit of a supply sitting in this area, right? You see this gap down between this doji and this strong red candle here. So maybe a little bit of a supply zone sitting in this area, and that caused to kind of find the top and kind of reject it to try to pull back. Went straight through the 50 on Wednesday. Wednesday was a really rough day for the market. It went straight through that 50-day, bounced on the 20-day, and then found where I believe there's a potential demand zone in this area here, right? So it came back to this demand zone and kind of bounced and rejected off of the 50. So right now we're going to be fighting through that 20-day and that 50-day for tomorrow, right? Those are going to be the main areas to watch for tomorrow. Personally, I might not even look for anything until after SPX finds what it's going to do off of this 50-day SMA or the 20-day SMA tomorrow morning. But we'll see. And if we open up above or below one of the two, then we'll see how it reacts before we decide to take a play. One is QQQ. As you know, QQQ has identical setup to SPX for the most part. QQQ is showing a little bit more strength in that. Yes, we did reject. We filled this gap here, so that's nice, right? But we did reject a bunch of little supply sitting in this area, and it went straight underneath the 50-day, and now we're currently just above it. Let me just go into the 30-minute. We've just been consolidating on that 50-day moving average for the past 3 sessions or so, right? Just like testing the waters to see where we're gonna end up with that 50-day. So QQQ is showing a little bit more strength than SPX for now, and we'll see how things shake out tomorrow. Now, the easy thing to do is just play strat and just take the break of the high, and you can target the previous high. I think that based on what's going on in the economic calendar, as well as the Apple event, might give us a couple of choppy days. Maybe we break above the 50-day and then come back to retest it on the next day or something like that. So this week you just got to be really careful in picking the direction. Maybe let it and then jump in a little bit later when you pay a little bit more money, but it's more secure at that point, right? Let's quickly go through XLE. XLE is near its highs from earlier this year. Right near the January highs, just like less than $1 or a little bit over $1 away from the January highs, and then just a couple dollars away from what I believe is all-time high here at 94.71 for XLE. So a lot of strength in XLE. I like this very, very strong base with a nice bounce move, good bull flag breakout, continuation all week, right? Pretty much all week long. What I find with XLE and a lot of those energy names is if you are entering the play, you can get into something that's like relatively close to the money, or just like maybe even one spot out of the money or two, and you can hold it for a couple of days and you'll be rewarded very nicely as long as this trend is intact. Now, being where it is, I would be very careful to kind of see what plays out at this level. As you can see, you know, we made a new high. We broke out above that that downtrend resistance line, broke through it on this strong day, and then failed immediately and went right back into that resistance level. So I'm sure there's a little bit of demand here, supply here. So I would just be wary to see what happens with that supply. Whether that supply, we kind of just consolidate underneath it or through it, or whether we reject really hard and fall hard to the floor, right? So we'll see what happens. I would wait for the reaction and let it break and retest, or let it fall down and retest, right? Let's wait for the retest on that zone. Next one is XLF. XLF right now is currently forming a massive wedge. Let's go to the weekly real quick. Massive wedge forming on the weekly. You see prices just getting tighter and tighter in this zone, right? And obviously this wedge is not perfect, but you can see the trend, right? So all the moving averages are consolidated here. Let's go into the 1 hour. All moving averages are consolidated here. They're just all right on top of each other. You know that the price traded above the 50-day for a few days here, and then broke through, came down, tested the 200-day, forming higher highs. This almost looks like a rising wedge, a very flat rising wedge, which typically breaks to the downside, right? So there's a potential for this to get another 200-day moving average retest if we do break down, if like tech rips and all money flows out of oil, or rather energy, financials, then we do get that break to the downside, retest that 200-day moving average. Overall though, the way that this thing is looking, I think that it's going to stay above that 200-day moving average, especially since they had the opportunity to stay below it, especially with this big hammer day here. And then we formed kind of an indecision doji here, retested the highs, and then broke through. And now we're retesting those previous resistance levels. You know, there just so happens to be a 200-day moving average here, a 50-day moving average here. But I think that there's potential strength in this sector, especially looking at these higher lows. And again, we got the student loan thing. You know, they're restarting student loans, which is going to be great for banks, bad for the consumer, and bad for the individual who who may owe, or whatever the case is, but very, very good for the bank. So maybe you hedge your consumerism with some XLF calls or something. Let's see. All right, so I don't have too many names tonight, and I want to rip them. I know this is pretty late for everyone, so I just want to get through as quickly as possible. Apple, we had that event obviously on Tuesday. What I'm liking for Apple is, now we did form this higher low on this bounce here. You know, Thursday was just an interesting day because it was a strong gap down, and then like a nice kind of not the strongest recovery, but you know, it could be way worse, right? We tested previous looks like previous demand here, got a nice bounce out of it, and then everything's kind of stalled out for Friday. Now what I'm looking at for Apple is I wanted to retest. Let me get rid of some of these levels here. There's too many levels, I think, here. Yeah, so what I'm looking at for Apple is a potential retest here. I'm looking for a potential retest of that 100-day moving average. That's all I want for this week, right? All I want is for it to paint a candle right into this 100-day moving average, preferably tomorrow, right? So that Tuesday we have a nice setup, whether we get some weakness in Apple's new product line to send this back down to the 200-day moving average, you know, on its way to 200-day moving average, or good strength to try to undo some of this wick on this stick here, right? So I'll be looking at whatever reaction Apple has. Hopefully it's going to be off that 200-day moving average. But these are the key levels that I'll be watching for Apple on your screen right now. The next one I have on this list today is LRCX. The reason why I like LRCX for this week is it's very clear cut. I mean, price action has been very, very disgusting lately for LRCX. It's been very hard to kind of see the patterns. You know, we did get a wedge breakdown, and then it kind of found support on its 50-day moving average, bounced up and down off of it a couple of times, formed this rising wedge and broke down back to the 50-day. So it is in a decent spot where there's a bunch of support. But what I love about LRCX right at this moment is that we are currently painting an inside bar inside of Thursday's price, right? So let me get rid of some of these levels here. Not that. Get rid of some of these levels here. So we do have that inside bar And I would love to paint one more inside bar here on Monday, and then maybe send it with whatever happens with Apple on Tuesday, right? But nice, easy gap fill. We got the 50-day moving average, which has acted as support a bunch of times in the past. So I'm looking for something like this. We have this kind of falling resistance line here. I want to break out through this candlestick, try to undo some of this doji and retest this line here before maybe going back down or something, right? But I'm loving it. It's very clear. There's a clearly defined area where it can either break to the upside or downside. I am favoring the upside based on this gap and based on the 50-day. And so it's just a nice clean play for me. The next one that I have is Amazon. Amazon, very simple. I'm just looking for nice show of strength on Thursday. I think everything bounced, but Amazon went crazy, right? And put in a $5 candlestick on Thursday, which isn't unusual, as you can see, but it's nice when it does it, right? And especially when you catch it. Let me just extend this out, make sure that, because these are always going to come back into play. So 50 days acting as support, ripped right through that 20-day, broke out on Friday from Thursday's previous high. So the next target for this naturally will be 139.94, which is this previous level here. We could just round it up to 140. That's my target for this week for Amazon, as long as it continues to show strength, right? Amazon is very susceptible to news, so so just keep that in mind if you are playing Amazon this week. It may move with Apple, it may not. I think there's Amazon's restarted its attempt at delivering last mile, which means it cuts out UPS and FedEx from its fulfillment centers. And they tried it, I think, once in a for them. They currently have last mile infrastructure here in New York City, and so you see Amazon branded those EV trucks. I think they might be Rivians actually, or Zoox. I think it's Zoox is the name of the company. And yeah, I mean they do a great job. I see them pretty much every single day in my neighborhood. So they have a good presence here in the city, but it's easy to do it in the city, right? The tough part is like the rural areas, Pennsylvania, Ohio, Midwest, Dakotas, and all that. But if there's any news that comes out of that, maybe like preliminary success or something, then that might be good enough to send Amazon up, because at that point, not only will they bring their bottom line up, since they're not paying UPS and FedEx all these fees, and take their service in-house, right? That's better for them because they can do it for cheaper, but also, and obviously it's better for the consumer because the consumer's shipping price goes down. Obviously some of us have free, so it's just, it's better, right? It's just better. But then they can start to offer these last mile services to other people, and then you start seeing Amazon as kind of a shipping service. So you already have like UPS partnerships where you go to like a UPS store and you can return your Amazon items there, for example, unboxed, right? And they take care of it. That's a very key partnership. But what UPS doesn't recognize is that Amazon is just going to eat their food at the end of the day if they can get this last mile thing right. But anyway, I like Amazon too, and obviously I'm a shareholder. I'm a business partner of Amazon, so I'm obviously biased, right? So take that everything what I say with a grain of salt. But I'm looking for 140 this week, and then if we can get that 140, I think we can easily break through this falling resistance line, and then maybe towards the end of the week or maybe next week target that 145, which is just where previous all-time high is. Previous high is, not all-time high. This thing has way more upside, right? So, but it's been working its way up slowly, and we've been printing money the entire time. So thankfully, right? Next one is Tesla. Tesla, I really like Tesla where it's at right now. I didn't look at the weekly. Yeah, the weekly looks beautiful. So let's get into Tesla. The reason why I like Tesla so much is because there's been a consolidation the entire week. We have 5 days of just sideways price action, along with this, right after this massive candlestick. So we have yet to really break through the range of this candlestick. We tried on these few days, but we kept failing each time, right? So I wouldn't consider these two a break. These are more like a fake out, right? So I think that if we can get up above if we can hold above Thursday's price, that'll be the first target. The next target will be above Wednesday's price. And then we got that 50-day. That 50-day has been a wall, an absolute wall for a Tesla, So once we can get through that 50-day, And that's what I'm saying. I don't want to rush into it. I don't want to put a candle like this and then fail the next day. I'd rather like let's slowly trend upwards, right? We're already doing it. We had this low on Thursday of $243.27, and Friday's low was $246.67, right? So we climbed $3. So that's what I want to continue to climb. And then once we get closer to that 50-day, let's get that breakthrough, right? Let's get straight to that 70 or so. Is what I'll be looking for. I'm looking at Blonde Broker's post inside the community. Tesla looks like inverse head and shoulders. If you look at the weekly has that inverse head and shoulders look. At your left shoulder, here's your head, you know, little earlobe or whatever, and then here's your right shoulder, right on that 100-day moving average. So let's see, needs to recapture $250 in a hurry for 257 and possibly higher targets. Is currently holding the channel. Maybe this, let's see what, oh, she's got a channel on the smaller time frames, looking like, you know, and I might be totally butchering this, but something like this, right? I would probably paint it over here, right? Something like that. Let's see, 246 harmonic. So break through below the channel on her harmonic. We got 232, right? So nice breakdown below this 61% fib down to the 50% fib, right? I like how things line up like that. And then above 267, above this 50-day moving average, we got 262. Above 262, we got 267, where my 618 fib is from previous level. So, you know, I think the harmonic, that those patterns are very interesting because they always come to fruition, even though they look like they never should, and they always do. It's very strange. So for me, and I use fibs pretty much every day, even in my own work, in my workplace, believe it or not. And so I believe in them, and the fact that they line up well with the harmonic pattern, I think is just very interesting. So that'll be something that maybe I'll get into. Insane. So maybe that's something that you'll see us discussing a little bit more openly on the floor. We'll see. But I like Tesla on the daily. You know, all this consolidation is very, very strong, very solid. And the fact that it's starting to form higher lows on each individual day, right? We have these lows down here, then we have these lows here, and we have these lows here. They're just progressively getting higher, but that 50-day is going to be the main target to take out. Honestly, like, it might be even worth it to just let it go through the 50 before, you know, let it interact with the 50 before we even take the play on it. Just because, you know, 7 days in a row of rejection says a lot, right? So on the other hand, it could be obviously a bunch of demand, supply sitting in this area, right? Supply sitting in this area potentially, and Tesla is just slowly chipping away at the supply, filling the orders, right? Morgan Stanley upgraded Tesla to $400 tonight, which is absolute insanity. So that's going to be a really good catalyst. You know, Morgan Stanley is one of those names that once they put your ticker on, the market will usually move it in the direction of wherever they're going. So good catalyst for Tesla there for sure. Let's see if there's any other news there. Not much, but that Morgan Stanley news that's going to be enough. You know, it looks like it's already up $5 in pre-market, based on Robinhood. So yeah. I'm loving Tesla for this week. Delete that. Loving Tesla for this week. I want to see that range break, and I think it's favoring the upside. But again, wait for the 50-day. CCJ. And a lot of these names, guys, are just gonna be the same names that I always play, right? Like, I mean, if it's showing strength, if you have like a move like just a move like this, just absolutely monster moves, you know, strong days like this, and then consolidation, continuation, like, if this thing is showing strength, there's no reason to look at anything else. There's no reason to look at anything else, right? If there's something, a setup that you like, or whatever the case is, and it's showing you, like, it's paying you week after week after week, why not continue to get paid, right? Until the system breaks. So just to remind you, CCJ weekly is nice wedge, breakout, retest of previous resistance here, continuation move, nice, strong looking, weird kind of doji, faked you out if you weren't thinking of long term. A doji like this would really signal a reversal, especially after like kind of a consolidated move like this, retested and continue the move to the upside. So I just think that there's more keeping it simple, I mean, we formed a new high here on Friday, last week Friday, of 37.89, and so I think that there's more once we break through this 37.89, we can target that $39, which is the finality of this measured move on the Fibonacci, right? We got that 1618, which is the end of that move, right? Typically 1618 pull back to 100%, which is right around here somewhere, and then either continue the move or do a fib on its way down. So but yeah, $40, and if that's if you think that this is going to come to fruition, firstly, tech shows weakness typically in this month, so money will flow into like CCJ and X and the other XLI names, right? So that's one. And then two, if you think it just on a technical standpoint, if you think that it's like going to continue its trend that it's been doing all year pretty much, or all second half of the year, you can cop some 40s, some 40 calls for October or even for November, and just take it off your screen and just chill, right? So I like CCJ for continuation. Next one's DDOG. I like DDOG strictly because of this gap, right? We had this big gap from earnings, and the reaction has been, even though we gapped down, we've been going up ever since the gap down. So we've been drifting back into the gap, right? So, which is nice. It's good for a ticker to do that. We did have this, let me just zoom into this, do 30-minute. Right, we did have this kind of falling resistance line here this week, and DDOG broke out above it, retested it, and kind of worked his way back into the high. So we want to see, strong rejection at that high, so it looks like there's a little bit of supply there, right? Strong rejection. You see that big wick at the previous level, right? So we can work our way into this wick. I don't mind going sideways within this wick one or 2 days, but the target is going to be that 50-day moving average, right? Obviously, the target is going to be the top of this gap, but the 50 will be a target for this week if we do get the continuation move. So I'm liking D-Dog for continuation. I think we already talked about XLE, just like a continuation, same thing, continuation move. I'm looking at my notes here. I hand wrote, what I'm looking at for the week, but XLA, we want, for those of you that weren't on, we want to break through this little bit of a supply zone here, so be wary of it. I want to take the play above 93.25 into the 94.76 level all the way to your left of your screen, or let it kind of fill with this area, break down, and pull back to this 90.67 once more, right? So the reaction off of this green line right here is what I'm looking for, with XLE favoring the upside. For CAT, I'm loving CAT to the upside. Let's look at the weekly on this real quick. Yeah, look at this. This is beautiful. We got, get rid of some of these lines. Move drawings. So we had this strong candlestick here. Let me just draw the range of that candlestick. Right. That's the mother bar. So that's the ultimate targets. We're going to either target the bottom or the top of that one candlestick. So we kind of formed the inside bar, broke to the downside, and then ripped back up to the upside. Pull back a little bit of supply sitting in this area up here, as you can see by pushing down, but it caught on that 20-day moving average, this blue line, right? But nice strong move on that week, put us back above that 20-day moving average. A lot of buying pressure at this level, and we do have continuation of the trend, right? Higher highs and higher lows is what I'm looking at for here. Now we have these higher lows here, and if the trend is intact, we can work our way to make a higher high, right? Break through that 293.88, targeting 300 for CAT. For maybe, 2 weeks. Let's give it 2 weeks. I see it doing $20 in 2 weeks. If the market is right. MU. So TSM reported numbers, I believe, on Friday. Let me just look through. Where is it? DYT posted it in earnings this week channel. They announced the net revenue, a positive net revenue, and 6% monthly increase revenue. And let's see, they're still down for the year, but that's understandable because 2022 was just a shit year for tech overall. But nice gain overall for the month from July to August. And so the reason why I bring TSM up is because they're within the same industry. And I would think that if TSM, they're all within the same kind of supply chain. right? And so I think TSM comes before Micron. Micron's part of the supply chain uses like parts such as TSM parts in order to further, then they sell to AMD, then they sell to Nvidia, then they sell from there out to auto manufacturers and smart home device manufacturers, stuff like that. But anyway, I say that to say that basically TSM is showing growth, and so there's no reason why MU wouldn't show a similar growth unless they're just not capable of handling the load that the demand that maybe that industry has created for them. But either way, I like it to the upside on a technical aspect. We do have this falling resistance line. This is like a JCAT triple tap right here, right? For the most part, and then we have low here, higher low here, and then we have this new higher low. So far, right? So far, this is our higher low. So nice bull flag as well, right? We got 5 candlesticks up, 5 candlesticks sideways, right? So I want to see the breakthrough the falling resistance line. First target will be that 70, what is this? 72.34-ish. And then above that, we got 74.77. Then above that, we got 76 for MU. MU plays very, very well with technical analysis. That might just be, a coincidence, right? But if you believe in those kind of things. But I'm loving MU to the upside, especially with that bull flag. Next, KS. Now, this isn't my favorite setup. However, I will acknowledge that there are multiple possibilities for DKS coming into this week. Go ahead and set it there, right? Now, the first possibility is obviously an upside move. It's upside and downside, right? The cat's out the bag, upside and downside. But what I like about it is, so let's do downside first, just because it's easier, right? Very clear. Let's just do a 2-day candlestick, a 2-day chart. Boom, 2-day chart. Bear flag or an H, right? Bearish H, whatever it is, however it is that you identify. That makes that works with your imagination to see the patterns, right? You got that bear flag, or you got that H potentially on a 2-day, which can break down the target, this $102 level. And if it hits that 102, I believe it'll easily get to that $100 mark real quick, right? Just to test that $100 mark. So that's the first setup. The second setup is we do have a higher low formed on DKS, coming out of Thursday's price action, right? Now we did break above the range of Thursday's high on Friday. But that can mean nothing, right? I'm not gonna put too much stake in that. But I don't want to ignore the fact that it is a higher low, right? We do have that higher low. We do have potentially a little bit of a demand zone down here. The reason why I say there's a potential demand zone is because we got all this buying pressure here, and then it sent it way up back to the highs. So it's a story of supply sitting up here versus demand, right? Who's gonna win? So I wouldn't be surprised if this thing kind of traded sideways along this pennant here. Let the 20-day moving average catch up so it can actually form a reaction off of it. And what I mean by that is investors will form a reaction. Their trading algos will form a reaction based off of a movement on that 20-day moving average. So don't be surprised if this thing goes sideways. But if we do break down, I want to see it target that $100 mark at some point in the next couple of weeks. Next one is, what do I have? DocuSign. What do I have for DocuSign? I have a downside continuation for DocuSign. DocuSign to me just looks extremely bearish, only because we've tested this level a bunch of times and every time we failed. And then this past week we had 1, 2, 3, 4 days of all upper shadows on these candlesticks, right? And then obviously a big bearish engulfing, breaking right through that 50-day moving average. A little bit of a bounce at the 20-day. I think maybe we retest the 50-day, and then Tuesday, Wednesday, Thursday, we ripped back to the downside to retest this previous demand zone over here, right? So again, I mean, I think for me, it's very clear to see that it's usually supply versus demand in these markets. And right now we have another battle of supply and demand within DocuSign, right? And then, just on a fundamental perspective for DocuSign, like what have they done to grow, right? What have they done to expand? They're a tech company. Like your technology, okay, cool. You've had the same technology for the past 5 years. What else can you do? Like what other tricks do you have? How else are you gonna grow, right? Because any every company probably uses DocuSign at this point, right? How can you grow from that? Signing on, let's say a company onboards 100 users and they're all using DocuSign. That's cool. But like at some point you need to you can't rely on external parties to grow their companies in order for you to grow your business. How are you going to grow your business internally? So that's just a perspective for DocuSign. I want to see it come back to this demand zone down here at 47-ish, and then take it from there. The last one that I have for tonight's show is Google has been amazing for us this year, and I think that we've caught all of these moves. We've caught even like some of these strong moves in this consolidation. We've definitely caught all of this. This is one of the best couple of weeks in Gold Rush with this move right here. And it's not the easiest chart to play if you're zoomed out. If you put some more perspective, 2-day or 3-day on it, becomes a little bit easier, right? 3-day becomes a little bit easier. We do have the inverse head and shoulders. We do have that cup and handle that broke out, right? We do have that lower shoulder on the left, higher shoulder on the right. We do have a strong move here with a consolidation breakout, right? Bear flag breakout. Bull flag breakout, and now we have another potential bull flag here forming on the 1-day, right? So, and I wouldn't be surprised if there was some sort of reaction with Google and with Apple, the Apple event this week, right? Now, we do have a little bit of a broadening, which I'm going to ignore because that's just price. It's not enough data to really say it's really broadening or not. Well, we do have the 20-day sitting here as potential support. We do have the 50-day creeping up, which always is going to give us a reason to bounce, as you can see with Google a bunch of times in the past. And then we also have all of this supply that's been tested 1, 2, 3, 4 times, 5 times before it bounced. So I think that actually breaking out of this range, let me go ahead and draw the box. We were painting this range on Google here, right? Just like real sloppy, right? Quick and dirty. We broke above the range and we came back and bounced on the top of it. So that's very, very telling of what investors feel about what Google can do, right? And right now I think price is going to go work its way, continue to the upside. And as you can see, I do have a final Fibonacci target here, 145-ish or so, right? 144.67. 144.69 rather. So that's what I'm looking at for Google. Let's see Microsoft. Microsoft on the 1 week, we have a nice big strong downside move, big strong upside move. Pull back at the previous highs, did make a new high and fake a bunch of people out. And I'm sure people made money on this 1 wick right here, but pulled back, forming a handle, in my opinion, on the weekly, right? Let's go to the 2-day real quick. Yeah, so we formed that handle. We just kind of pulled back where there was previous resistance. We did make an all-time high here, which right? Is that what that is? Or am I bugging? Yeah, that's all-time high just a couple of weeks back. And we fell hard into that 100-day moving average, right through the 20 and the 50, back into that 100-day moving average, consolidated alongside of it for a bunch, and then kind of ripped out of it. And now we're above the 50-day moving average. Let's go to the daily. Kind of hit it, pulled back, rip through it again. Now, I wouldn't consider this a full takeover of the 100-day or the 50-day moving average. I want to see maybe another doji such as this one, or just like even a tiny candlestick with a small body and no wicks, just alongside this 50-day moving average. Maybe even like a resting bar up here within the wick here would give me a lot of confidence for this to continue to the upside. Now, I do have this zone marked, so this is going to be a tough area to break through. You see how we kind of went sideways within this area for a bunch of weeks. And then when we got above it, we finally printed a very strong candle. Good volatility going up, good volatility coming back down, right? So I'm afraid that we might go sideways again within this range. But I don't know, maybe all the orders were taken out by the time we got here and I was going to just rip through. We're going to fail, right? I think that based on where it has... so I measured this move here, which I don't really like. I'm going to get rid of it, actually. I see it dancing with some fibs here, but again, I'm not in love with where it's at, and I really should update it, so I'm going to do that real quick now. Let's do it from the gap up from earnings. There. So just looking at it, we managed to hold a 50% Fibonacci level, which forget about the math. I mean, forget about the jargon, right? Forget about the technicality of it. it went this many dollars up, right? Or it went up this strong of a move, and it came back to about 50%. It came back halfway, and then it's turning back around to go back up, right? It's not breaking down more than halfway of the move. It tried a little bit here, but recovered and was able to hold a 50-day on this massive dump, the 50% Fibonacci level, or 50% of the move, of this move here, from this candlestick to the top of this candlestick. It was able to hold it, and now it's working its way back up, forming higher lows and higher highs, trending upward, right? Microsoft, if we do get that, hopefully like some tension along this 50-day, break above the high of Friday's candlestick, target the whatever day this was, Friday, July 28th, and then above that we got 344.67. Above that we got 352. I think 350 is going to be a wall personally, but if we do get above this level and the 340 level, I think 350 is 100% in play. Let me look at this on a monthly real quick. Every day. I do 1 month. It might skew it. Yeah, it skews it a little bit. On the monthly, we do have an inside bar so far, with Microsoft favoring the higher portion of this previous month's bar, right? It's not down here where the wick is. It's way up here, and it's forming a green candle. And then if you look at I'm going to try to connect some of these bodies here. We got a little bit of a downtrend resistance line, which Microsoft can easily break through, hit that second top of that body, and then start hitting some of these upside targets. And the ultimate target for that move that we just drew brings us to 423.27, which I would say, let's call it 2026. We'll be there. I don't see us hitting there, within this year or next year for sure. So we'll just give ourselves till 2026 to hit that level. But there it is. You heard it here first. Thank you guys for taking the time to be with me here on a Sunday night. And I'm very excited for this week based on all of the catalysts that we have in the economic calendar. Not too much on the earnings front. Apple's going to have Apple event. Might be an interesting day on Tuesday. It's going to be tough for me to actually, as a patron of Apple, to watch the event as well as try to live trade it. It's always tough. It's always fun. So let's have fun this week, guys. Thank you so much. I'll see you guys tomorrow. Peace.